give us a second. I know if Darren comes on, it's going to be hotting me up that I'm not recording the session. Anytime. All right, great. All right, so amazing day, guys. Grand Rising. Let's get ready. So we're looking straight away at these pairs, and we're going through and seeing what's our first point of confluence. Now, of course, we still must understand what's going on with the market. Now, what does that mean? That means being able to zoom out. All right, getting very macro, and being able to have a look and see what is going on in these markets. Are we in a premium? Are we in a discount? Okay, this is the basics. This is the basic fundamentals of not only the financial markets, but any market. Okay, if any market if I go to Wembley market, I go to Hackney market, I go to any type of market for me to buy, vegetables, for me to buy fish, for me to buy whatever it is that you want to buy in a market, you want to know, are things expensive at the moment or are things cheap at the moment? It's very, very simple. Yeah, because if I went to the market and everything was expensive, I might not be so inclined to want to buy when things are very, very expensive. Have a look at this range. Let's imagine that this is not the range for gold, XAU USD. This is the range for fish. And when I get to that market and the prices are up here, I might be like, I don't know if I want to buy. I don't know, I'm not a fish head, I don't put something against fish, but I don't know if I want to buy a snapper for £20 a snapper. Sounds a little bit expensive. Now, I'll tell you what though, if I was somebody who was selling snapper and I've got a box full of snapper, well, I'll be like, listen, I can't wait to sell some snapper. They're £20 a pop. I bought my box when it was down here. Right now, snapper fish is up here. I want to sell. All right. And vice versa. When we go again, this starts to set the trend for the market for snapper. So when the market gets down here, I'm like, snapper was 20 quid a pop 3 weeks ago, and now it's £3 a pop. Okay, I'll buy some snapper. Yeah, I'll buy some salmon. Yeah, I'll buy some, I don't know what other kind of fish there is out there. All right. But when the price gets back over here, I'm like, geez, snapper is £30 a snapper. Yeah, I remember when it was £20 a snapper back in the day, but unfortunately, we can't go back in time and buy snapper from 3 weeks ago. So we now know it's expensive here. We're going to wait till this market gets in a discount before we want to buy snapper. So we need to know that basic concept. So right now, if we can see with this gold market going all the way back to approximately 2016, we can see that this market, have a look at my dots, was making higher highs, higher lows, higher highs, higher lows, higher highs. And we're in a premium now. So just that bit of confluence is like, maybe, yeah, it's not for certain. Maybe this market might be wanting to sell off. Maybe it's in a premium and people will be inclined to sell that thing, i.e. this thing happens to be gold. Now that is not the be all and end all. That is one bit of confluence, one bit of information that we can tick off, that we are in a premium of a bigger range, and maybe the market wants to sell off. Maybe not. Maybe the market's been going higher and higher and higher and higher because of something's going on in the world, and it's going to continue going higher and higher and higher. All right. However, we want to trade what we see. Now, if I go to my daily time frame, what I want to know is what happened. What was the momentum yesterday? Yeah. What was the momentum of the markets yesterday? That's what I want to know. Is the market going to continue that momentum or try and make some retracement or whatever it may be? Now we can see this is where we come into our outside candle energy. Yesterday, we had a big bearish candle that closed outside the range of the previous red candle. This is called an outside bearish candle, showing tremendous momentum of the market going brrrr and selling off and pushing all the way down to here. Remember how markets open and close. Red candles open on the left, top left-hand corner, yeah, and close bottom right-hand corner. It's ultimately the top and the bottom. That's where the price is. But easier way for you to remember it is top left-hand corner for bearish candles, where they open, bottom right-hand corner for red bearish candles where they close, and not opposite, but for bullish candles is bottom left-hand corner and top right-hand corner for where they open and close. So we can see that yesterday's candle here opened up here at this price, about 2684,149, and closed bearishly down here at approximately 2616,488. All right. If you want, you can just hover over the candle, and can you see this information over here? It's showing you what the market, the open, high, low, and close of the candle. showing you that yesterday there was minus 2.42% that market fell. Yeah, that candle fell from the previous state. All right. Now, what does that mean? That means that for today, we're expecting to see another outside red bearish candle, which is where we currently are at the moment. Okay. Now, however, this market can either continue to go in and closing as a big red candle. We've missed our opportunity to get in for the sell. Yeah. Or it might decide to first tap in to close this inefficiency in the market. This inefficiency is something we call an imbalance, or something we hear people call a fair value gap. Okay, so therefore we may be able to buy into the sell, so that by the end of the day we have a nice red, as we currently have it, a red outside candle. Now the market might just say, you know what, Jay, we don't want to go back in here today, we can't be bothered. Furthermore, the market has already done that. It just hasn't done it compellingly, because this market here opened on this yellow line. All right, it says previous open. Let's just say open. It opened on that yellow line. Okay, and if we're trying to, if we think that this market is going to be a big, this day is going to be a big red outside candle, anything above the open is a good entry. Let me say that one more time. If we believe, because of yesterday's bearish outside candle, okay, that today's going to be another bearish outside candle, then anything above the open of the candle is going to be a good entry if we believe the candle by the end of the day is going to be an outside red candle. Okay, so therefore anything above that yellow line, we could have been looking for an entry. Now we can't just look at it on a daily time frame and go, oh look, there's a wick up there, let's just hit our button for the buy. Can't do that. Yeah, you might as well go to the casino, have a whale of a time in the casino. Yeah, we still have to have some other confluence. All right, so when we zoom down, have a look on our 4-hour time frame, you can see this bearish energy. This is coming from yesterday. Bearish energy, bearish energy. But now you can see I've got an indicator on my screen. The indicator on my screen is simply identifying the sessions. Can you see those red and blue lines? Those little squares. I can try and brighten them up because they are a little bit faint. All right, if I do that, you can see those blocks are showing me that this was the Asian session. This was the previous New York session. This was the previous New York session. Our yellow block is our London session. So we can see here right now that this market on a 1-hour time frame, this was Asian session, all right, till about 4 or 5 in the morning where we get Frankfurt session in around here, around about 6, and by about 7, all right, a.m. Yeah, if I scoot back here, we can see London session. Now within our London session, we have taken some liquidity. All right, you can see these dotted lines. That's because I've gone back in the past and looked to see where there are pools of liquidity. Now there is somebody here on a session that's like, what is liquidity? Liquidity is simply a pool of money. This trading game is about, I'm trying to take your money. I'm trying to make your money my money. That's what the institutions are doing. The institutions understand where there are pools of money, where retail traders and other smaller traders place their stop losses, hoping that price turns around and goes in their direction. It's only when your stop loss is hit that you lose money, right? So that becomes a pool of money, all right? That becomes a pool of money that the markets are drawn to. They are drawn to a pool of money. And after it takes your money, just like a thief, it likes to run in the opposite direction for a little bit. Yeah, it likes to take your money, run in the opposite direction, run around the block, take your money out your wallet, put the money in its pocket, and then throw your wallet away and then walk past you like it never did just rob your wallet. That's what the markets like to do. So liquidity is a magnet to price. All right, so these levels here that you can see, I've used this indicator just to help me with, are showing me session lows and session highs. And typically, you see session high lows and session highs contained within a range, meaning there's liquidity above and below those ranges. So these red lines that you see me putting in is identifying the liquidity. Now there is also liquidity above and below any, substantial high or low, not just session lows and highs. All right, but again, it gives us a guide, because you can't go through the chart and be putting in a line on every single mountain high and mountain low, especially if we're just analyzing it from the macro bigger picture. All right, so what I'm saying right now is this: that today's candle is going to be a big red outside candle. That's what I'm saying, based upon a previous red outside candle. However, I'm saying that up in here in this gray box where I've said imbalance is a huge draw on price, that the market might want to come and not only eat some of this liquidity above these session highs, but close up this imbalance before continuing and becoming and being a lovely red candle. That's what I'm saying is a potential narrative of this market. Now, just because I've said that, I still need more confirmations, more confluence to confirm my ideas. We have seen that the market has taken these liquidity levels and pushing on towards another level of liquidity here. All right, now this market is either, like I said, going to continue just selling off for today. Look at it on a daily time frame, have a look, that it just doesn't care about coming here and closing this imbalance in here, and it's going to keep selling off. It's currently broken structure here. It is wicked below structure. It hasn't closed below structure yet, but it's wicked below structure, because this is a daily candle and the day isn't over yet. For all we know, this candle could close today as a big massive green candle coming up here. For all we know, it won't, more than likely, but it could do. Okay, so this candle isn't closed yet. There is in fact another 14 hours 12 minutes and 24 seconds of this candle. All right, now because we are day traders, we are trying to get active within those 14 hours. Yeah, we want to take opportunities within that time frame. That means even if this market turns around now and pushes up from where it is right now here and just closes this little imbalance just to here, this is a huge move. This is a lot of pips that can be gained. A lot of money can be made from moving from here to here. Okay, so we're watching this market at the moment, and though the market opened up here, let's have a look at when it opened up there. All right, let's drop our time frame all the way down to 5 minutes. Okay, and let's go back over here. So say here, can you see here? Look at the bottom of my screen. This was Monday. This is 12 o'clock, and then we hit Asian session. Okay, and Asian session continued throughout the morning. Look at that. It's 1 o'clock in the morning on Tuesday. 2 o'clock. You see how Asian session is contained within this little red box. Yeah, it was in here, it was in here, it was in here. Then we started seeing the market dripping down, coming into Frankfurt, which is about 6 a.m., taking liquidity from below a previous New York session. This isn't my opinion. This is a fact. This is me reading the candles. This isn't my opinion. All right. The market pushed down here. It took the liquidity from below this New York PM session here and then started to go sideways in here. This is not an opinion. This is a fact. Yeah, and then the market this morning, as London session started, pushed down and took liquidity from below a previous session, which is where we are right now. Now, I was saying a bit earlier, I was looking at this manipulation W, but I didn't really like it. It was in here. I'm going to drop my time frame down to a 1 minute time frame. The market didn't give a damn about it, and it's good that we stayed patient to wait to see if we was going to get close above the high, which we didn't. The market actually pushed down further over here, and it's very close to this liquidity level, which I'm going to quickly check that I've drawn in the right position, because there's a very high possibility I've drawn it incorrectly. It's not in the right place. All right, so I'm going back historically, because unfortunately, guys, we can't look into the future for any data. We can only look into the past for potential data to understand where there might be imbalance, where there might be bullish engulfing candlestick patterns, where there ultimately might be demand in the market. We can't look into the future for that. I wish we could. We cannot. All right, so here we can see this is the bottom of a London session, this yellow box, which happens to be also a previous battlefield of an Asian session, okay, where this was an Asian high, and we can see from here strength and speed as this market pushed up in through here, okay. So here we understand that there was a lot of demand or bias came in the market to break this Asian session high and push up here for a whole hour with strength and speed, causing imbalance. Ultimately, there is an imbalance in here on the hour time frame. Okay, and the markets hate imbalances. Let's go to current price. Let's go to where we are right now today. Where we are right now today is the market is down here. Look, we've just taken liquidity from those little dotted lines that I drew. Let me drop my time frame down to a 15-minute time frame. We've taken liquidity from those dotted lines, and we've closed the imbalance, which we understand, which is a draw on price. Now, at the moment, I am a bit concerned that if you're a thief, why don't you come down here and steal this liquidity also? You're so close to it. Look, you got so close to it. Why not take this liquidity here? I am concerned by it, but I have to trade what I see. Okay, I'm gonna dim this down a bit, guys, because it's a little bit bright. It's not letting us see the candles. I'm gonna make this 95. Okay, remember, these are just showing us our session levels. Okay, so we've seen in here the markets come down here, taking liquidity, pushed up, pushed down here. Maybe we're making a big manipulation W pattern on a 5-minute time frame. Let me drop down to my 1 minute, see Hawk 1. Now on a 1 minute time frame, we have made a lovely manipulation W pattern down at the bottom, and the market has tapped in. It's here, and the market did tap in. It tapped in here. Okay, now I'm not watching that because I can't go back in time and take that entry. Okay, but this liquidity grab would be grabbing liquidity from over here, which for me is a bit, yeah. I mean, we took this liquidity here with this little spike, to be fair, and we had a reaction and then continue pushing down here. So I don't fully trust this. Yeah, even though we've had a reaction, yes, that's come all the way back up here. I don't fully trust it because we've had a reaction, but is this reaction going to break? Structure is the question. Right now, this market can come down here and go brrr, eat this liquidity, make a lovely manipulation W, tap in, and then go. Now, at the moment, that's what I'd like to see. This makes sense to me, the market doing this. Now, does the market have to listen to me and make sense? No. The market could say, Jay, we don't care about this liquidity. We're not coming for it right now. We're going. Could do. And if that is the case, that's the case. Okay. But ultimately right now, when I'm reading the candles and I'm understanding what I would like to do. Okay. I've unfortunately missed this little tap in here, which would I have taken? I would have taken it as a jab. I would have taken this as a jab. Why? Because I'd be reading and reacting to what I see. So I would have waited for the market to indicate. I wouldn't have taken it on the volley. What do I mean by the volley? I wouldn't have taken it when it tapped in. I would have taken it when it closed back above. So have a look. I wouldn't. This is the manipulation W in here. As difficult it might be for you to see. It's down. It's up. It's down. It's up. I would have taken this as and when the market, have a look, came back and tapped in to the imbalance, which is minuscule, which is this candle here. All right. So if I was rewinding it, this candle came and tapped in and closed this imbalance. Wick actually extended a little bit low. I would have been waiting for a closure back above this right shoulder. Have a look at the W. A closure back above there, and then I would have taken a jab. Yeah, or yeah, I would have taken a jab. I wouldn't have taken it on the volley, i.e. when it tapped in. So when that next candle formed, yeah, and that market closed above, it didn't even close there. Have a look. And it closed above here. I would have taken a jab in here. Coulda, woulda, shoulda, maybe, might have. All right, like so. But I'm not fully convinced, even now, even if I took that jab, that this market is going to push up and break past this structural level. Because when I look at it on the 5-minute time frame, have a look. We haven't got a big breaker structure and a manipulation W right now. We've actually at the moment as we speak, which doesn't mean anything because it could just change as I'm speaking to you. All right. We haven't broken this 5-minute structure yet. Look, the market's only been making lower lows, lower highs, lower lows, lower highs at the moment. Yes, there is a smaller entry here after it broke 1 minute structure in here. Some 1 minute little structure in here, little break, blah, blah, blah. But I would have, even if I took that jab, I would have made that trap, made it risk free immediately. Yeah, maybe I would have got to a 1 to 2, 1 to 3. And when I see this market peeling off like it's doing now, I mean, more than likely I wouldn't have done anything. I would have just made it risk free and seen what happened. But I don't trust it. I'd prefer to hear this red line here, which I'm going to put an alert on. Watch. I'm going to put an alert when it crosses down. I want to hear that ringing. Because that would have been it took liquidity. And when is it that we want to take a trade, guys? When is it that we really want to get into a trade? After what happens?
After liquidity's been taken.
Exactly. We've got a little bit of dilemma here because liquidity has been taken from around these dotted red lines. But for me, we kind of took it already by this little push here, and we didn't go. We like took, it's like a thief going and robbing somebody's purse, getting around the corner, open it up, it's got £8 in it. He's like, £8? He's thinking to himself, nah, bro, I'll come up for more money than that. So it put the money in his pocket, came back up here, made a reaction here, put the money in his pocket, clocked it was £8, threw the wallet away, and then it got back on his on crud. It said, you know what, I'm going back into the market. I'm going to looking for some more wallets. And the next wallet for me is over here on this red line. So though we've come down here and I don't know, it's doing something in here, pretending it wants to do something, the next wallet for me is this red line. That's where the liquidity is. And I'm hoping that when it gets into there, boom, we have those unfilled orders sitting in this area that's going to move this market and push it up so it starts breaking structure. And I'd like it to happen with strength and speed. All right, I'm leaving that alert in here. I'm going to go and look at our next one. For example, I also identified US 30. Have a look at the US 30 position. Was another thing that we marked up yesterday, and it did bits. Yeah, it did bits. I'm not going to lie to you. I was in US 30 early when we was talking, and if you remember, I squeezed up and I took I think like $800 out of it or something like that, and I didn't get into it again. But if I did get into it again yesterday, based upon our outside candle understanding and looking at it like from that perspective, have a look at yesterday. Yesterday we looked at this candle here. Sorry, this was yesterday's candle, but the candle previous was an outside candle. All right, this candle that when we looked at was a nice big green outside candle that I said, even though we've been raging, this is what we're saying. If I lie, I fly. Did I record yesterday for you to go and check? I don't know if we did. All right, I said that even though we've been remarkably bullish, we understand what that is. That's the Trump effect. Yeah, Trump added massive money to the market, just him getting involved. People are thinking to themselves, yes, make America great again. And we've seen US 30 do this. Boom. Yeah, this is when Trump got involved. Boom. This is him getting elected. Massive amount of money was added to this market. Very bullish action, reaching some all-time highs in the US 30 market. The next candle was indecision. People were thinking to themselves, should we close this market? Are we sure about Trump? Do we really know? Not too sure. This is an indecision candle, a doji. Then the next candle here was an outside bullish candle. And I said, based upon this green candle, even though we've got all of this imbalance below, we're expecting to see another outside green candle. And that's exactly what we got. I also said anything below the open of that candle, i.e. this yellow line, would be a good entry. Now in this instance, all we got was a little wick in here. However, if we got to a smaller time frame, that wick took some liquidity below our session low. And therefore, after that liquidity was taken, if we start dropping our time frame down, which I'm not going to do because I'm going to have to rewind all the way, we saw it break structure in here and look, pushed up. Our target would have been previous high of it being able to get and be on a nice green candle outside that candle, because we wanted to see another outside candle. The market continued to push up. It went crazy, kept pushing up all the way up. In fact, the market went berserk, and at one point it was up here. Yeah, massive amount of pips, massive move. I wish I was in that move also for the whole day. Yeah, so we've got another outside green candle, hence the reason why I've identified it in my little watch list as an outside green candle. Now, once again, we're expecting that we may get another outside green candle. Now, we are pushing our luck, because remember, this bit of confluence, this concept of outside candles, it's got to end at some point. It doesn't keep happening forever and never, never, amen. At some point, we get an inside candle. At some point, we get a bearish candle. At some point, it makes a retracement. But at least we can understand that where this market opened, first and foremost, the opportunity is closing this imbalance. So even if this market wants to go green again, we understand there's a potential opportunity for this market from where it opened here to come down in here. That is the first opportunity that's available to us. The next opportunity, if we believe is going to be an outside candle, would be it coming back up here and closing above this wick. But even if it doesn't, this first part of the move is definitely on the cards, whether it wants to go up or down. Right? So I would have been very small in here, or smaller, looking for additional confluence. So my additional confluence is understanding, have a look, that, let's go and look where that daily candle was. that this candle here, this red candle, opened on that yellow line where it's got opened on that yellow line. So therefore, if I want to sell into a buy, or I just want to sell into a sell, think it's going to come all the way down here, anything above the open would be a good entry. Yeah, so if I go to an hour time frame, anything above, let's look where that day started. This day started here. Anything above that open, let's imagine that I was up in Asian session, which I wasn't, and you probably know was you. This wick that come up in here, let's drop our time frame down to a 5-minute time frame for argument's sake. This wick that came up into this level here was above the open. Yeah, was above the open. 1 second, guys. Go. 1 second. Go. Shut my door, please. All right. Anything above here, all right, was above the open. Now we were sleeping here. We can't just do everything in hindsight. This is what 145. This is Asian session, but we have seen that market come up there and make some sort of manipulation patterns. I can kind of see it on a, let's have a look. Yep, on a 15-minute time frame in here, making this manipulation pattern in here. I can see it on a smaller time frame in here, on a 5-minute time frame. Not as great, all right. But ultimately, I'm thinking to myself, if there's an opportunity to sell into that imbalance, you know, I'd want to get involved above this level here. Now, London session started, and it's outside of my control. London session started when it started. I woke up when I woke up. It's 7 o'clock in the morning. London session started, and what can we see happen immediately in London session? What can we see? Let's see if you guys are up. You're active. What can we see happen? London session. Because London session is this yellow box. What happened? Come on, somebody knows. I mean, I've just helped you. What happened in London session? I'm gonna.
What did London session take the Asian session lows?
Yes, London session took the liquidity below the Asian session lows. This is Asian session, this red block. I've just put in the liquidity being taken. We've seen liquidity taken from here. Yeah, the market came down here. Nam. Let's look at it on the candles. Yeah, and it took Asian session lows, and just like a thief, I've told you, when liquidity is taken, what does the market like to do? What does the market like to do after liquidity has been taken?
Run in the opposite direction.
It likes to run in the opposite direction. So we've seen the market come down here, nam, eat this liquidity, and then it's ran in the opposite direction. Now the question is this going to run all the way above Asian session highs and take that liquidity? Well, I don't know, because I haven't got I didn't recharge my batteries for my crystal ball. All right, so I don't really know. Okay. But what I do know is I'm able to read and react to what the market may do. Now the market's come down here, taken Asian session lows, pushed up to approximately 50% of the Asian session range. Approximately. Yeah, so if I was to measure this out from here to here, approximately, can you see my green line? If this market has been, can't break this 50% little level where you see this green line here, and we've just come in here. Now, remember what I said from the bigger picture. This market, even if it wants to go up or even if it wants to go down, may wish to first come and close up, not this imbalance, but this imbalance that's up here. Okay, if I zoom down a bit, may want to close this imbalance in here first. That's even if it wants to go up. If it wants to go down, even better. It just keeps falling through here through this imbalance, or better still, falling through this imbalance, even better. But I don't know it's going to do that, but it may want to come and close this imbalance regardless. So when I'm looking at this market right now, in present time, I'm thinking to myself, yeah, I've got my Colombo on, yeah, I'm like, well, let me get rid of this little Fibonacci. All right, I'm thinking to myself, we've taken Asian session low here. It wasn't a great take, but we took it, and the market's run back to 50% here, and what I can see, it's actually making some, potentially breaking a little bit of structure. What do I mean by that? I mean, on a 1 minute time frame, have a look at my dots. This is a low, this is a high, this is a higher low, this is a higher high on a 1 minute time frame, and maybe we're breaking this little structure in here. Maybe we don't want to break past that 50% level. Maybe actually what we want to do is what JJ said, is maybe we want to start coming down here and closing up that gray imbalance some more. Yeah, maybe a tastier bit of liquidity is all the way down here. Because let me tell you something for free. This liquidity over here is tasty. Why is it tasty? Can somebody tell me why I believe that the liquidity, or not? Let me move that. I'm going to put this line here, but the liquidity is actually somewhere else. 1 second. Why around this area here, you know, is a tasty level for us thinking to ourselves, there's liquidity around here. Does anybody know why? Does anybody?
There's strength and speed.
Oh my goodness, A star. Because from here, there is strength and speed, yeah, that made this market over here go nuts. Boom! For this market to go boom like this, the only thing that's moving this market is not prayer. It's not, you know, man was a chicken foot and man cracked an egg. It's nothing like that. It's only buyers in the market that absolutely went crazy in here to push this market up. Boom! Smashing through previous structural highs. So therefore, you know, the opportunity is that maybe this market is going and seeking out those buyers. Why? Let me give you the concept of why. I want you to understand this concept. So we've got Pearl on the call. She's new to the community, all right? And glad to see she's here. We have to understand this concept. The concept is this, all right? Everywhere on this chart, okay, there are something we call unfilled orders. Now, what is an unfilled order? Well, it's kind of summed up in the name. It's an order that hasn't been filled yet. Okay, everywhere on the market, every black space you see, there's an unfilled order. There's someone out there that is willing to buy Air Force Ones at £300. I'm not going to be buying Air Force Ones at £300, but somebody out there is willing to. So they've got an order over here saying, yeah, when these Air Force Ones are £300, I don't mind buying them. And vice versa, there's somebody who, when Air Force Ones goes to £300, is like, bro, I'm selling this whole box. There are buyers and sellers in any market willing to execute at any price. Think about it. Think about your life. You're buying bread for a certain price, but in a certain country, man ain't going to be paying that money for bread. You'll be like, you mad for bread. You're out here buying coconuts for, if you try and buy a coconut in the UK, because of the, you know, them having to import it and blah, 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 man can get carried away. I remember once upon a time being on Bond Street and buying a coconut for £15. One coconut. They had a little store, what do they call them? The little store set up about coconuts. Just because man was going to bust it open and give me a straw. He charged me, I don't know, £13.50 or something mad like that. Now, in a country where you can reach up and pluck the coconuts out of the tree, do you think that man can understand you paying £15 for one coconut? You can't understand. But this is the market. This is the world we live in. There is somebody willing to pay a price for something that you are not willing to pay a price for, and vice versa. So over here, there are going to be orders that came into the market saying, you know, if Trump wins and whatever it may be, blah, 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 and that price gets down to 44,200, for example. Yeah, if you look right, it says 44,200 in US 30. I want you to buy as much as I can. We are going to go crazy. And that person might have said, I want you to buy, I don't know, for example, 1 million units, 1 million Air Force Ones at that price. Okay, over here. Boom! When the price got down to here, I mean, they heard the news or whatever it may be, boom! They tried to buy the 1 million. They tried to buy 1 million Air Force Ones at this price. But what happened is there wasn't 1 million Air Force Ones for sale. This is the concept. This is the understanding of why the markets move from these areas where we see strength and speed. Close your eyes and imagine you are Mr. Air Force One. You're Mr. James. All right, and Mr. James wants to buy 1,000 pairs of Air Force One. His money is ready. He says, listen, bro, when we get down to this price, if Trump wins or if the New York, whatever it is, win and everyone wants Air Force Ones, I want us to get in there early and I want to buy 1,000 pairs. But there's not 1,000 pairs to sell here. So what happens is when 600,000 comes on the market, he buys everything. And the market, he single-handedly moves the market. Because as soon as they released 600 pairs, he took 600 pairs. So the market moves, and all the little sheep follow behind, going, "Oh my God, the market must be moving. Let's buy, let's buy," and it pushes it up even further. And then people get to their senses. They come to their senses over here and be like, "Did we just buy Air Force Ones at this price?" And then the market starts to come back down and close the imbalance. And for more importantly, is this client, Mr. James, who's a big boy in the game. Yeah? You don't want to muck about with Mr. James. He's a great client. He wants to buy 1,000 pairs. He's one of your best clients. You've got gold ringing. He's one of your best clients. But he wanted 1,000 pairs. You only sold him 600. He's not happy. He's like, "Bro, I said I wanted 1,000 pairs. What are you playing at?" So the market is going. The market doesn't want to be inefficient, because if it's an inefficient market, he's not going to come again to that market. If you went to the market and you was queuing up forever to buy a patty, and you got to the front of the queue and the guy in front of you bought all the patties and they said, "Oh, sorry, no patties," you're not going to ever go back to that shop. You can be like, it's a joke. So when the market has seen this inefficiency over here, the market gives participants an opportunity to get back in at this price. Because remember, there was a man standing behind Mr. James that wanted to buy. He wasn't able to buy jack squat, because Mr. James ahead of him here bought all of them and moved the market. You're standing behind him in the queue with your £100 to buy your Air Force Ones. You're not going to be buying them at £300. You don't have £300. You're just upset that this market is inefficient and you queued for the whole day and you wasn't able to get in at your price. So the market retraces and quote unquote closes in balance and gives you an opportunity to get in near the price that you wanted to buy at. But when you do that, Mr. James still has 400 pairs that he wants to buy. He wanted to buy 1,000, he only got 600 here. So when we see market tap back in and take liquidity, drawn to closing the imbalance to give, good old Mr. Johnny over here an opportunity to buy his £100 Air Forces. But when it gets back down to the price that Mr. James wants to buy at, where he bought at before, we're going to execute his other 400 pairs of Air Force Ones trade. We're going to execute that order. And that again, hopefully, is going to give us a reaction that we can benefit from. That's the concept. Now, the issue is this. Maybe Mr. James did buy all 1,000 here. We don't know. So therefore, sometimes we see the markets come to great areas and then just melt through it. Why? Because he's no longer in the market. He is happy and he's gone. That's what happens sometimes. Or sometimes we see that he is there still, but he didn't. It wasn't that he only got 600. He got 900. So here, when the market comes back down to here, he only has to fill 100 more pairs, which moves the market a little bit. But the sellers that have been coming down from here and been piling in are more than his order for just 100, and the market continues to fall. We have a little reaction, but not a big reaction, because his orders that he's got left on the table, he's only got orders left for 100. He bought 900. So when the market comes down here, boom, we just have a little reaction, and then we're like, oh yeah, we're going up. And all of a sudden, we've been stopped out because his orders are no longer here. Maybe there's Mr. Johnson over here at another place that's got, he does have some orders in there, and the market reacts from. That's all the market does. It's supply and demand. It's executing orders. Some of them are market executions. Some of them are That's why people who do volume profile, if you've ever heard of volume profile, you might have come across it. They can see where there are limit orders in the market. They can't see where market executions are going to be, because obviously market execution is you just hitting the button whenever you feel like it. But they can potentially see where there are a large volume of limit orders. So orders before, say for example, if I was at a trainer shop and you gave me an order on a piece of paper, by the end of the day, I'd be able to see how many pieces of paper are sitting on my desk saying, yeah, I want to buy Air Force Ones at this price. I want to buy this many Air Force Ones at that price. I'd be able to see that. And before the next day the shop opened, I'd be able to gauge approximately how many, buy orders that I have for Air Force Ones. Because I've already got this. I've already got the statements, and I've already got the card details, and they just all they're waiting for is for the delivery to come and them to be at the price that they want to buy it. Because that is an order that is placed in the market ahead of time. I don't know when someone's just going to walk off the street, they happen to just take a drive, and they've just, oh yeah, let's just go to Lakeside, and they've gone to Lakeside and say, okay, I just randomly want to buy a pair of trainers. I don't know about that guy. But I know about the guy who placed his order 2 weeks ago and gave me his card details. That's how markets are able to see where the liquidity is. Am I making sense to somebody? Am I making sense to someone? There's someone on here that understands what I'm saying. Say, yeah, Jay. Go on, G, what are you saying?
I got you, man.
No, I'm saying man's just following.
You get it, yeah? That's why these markets move, filled and unfilled orders. Now, even the volume profile guys, yeah, who are able to see these volume of orders sitting in certain areas, it still doesn't. It's not the be all and end all, because there's added confluences to that. There's added other things that can come into to play. For example, like I said, if Johnny and his whole football team decide to just come into Lakeside today and buy Air Force One, you didn't know about them. They're gonna come in and buy a whole heap of Air Force Ones, and you didn't know about them. Also, fundamental reasons, news, other things, blah blah blah. There's lots of other factors. So even the volume profile where you can see orders is not the be all and end all. Hence the reason why I said to you guys, forget about thinking you are going to become the world's best savant trader, knowing exactly where the markets are moving, when, where, and how. No. You're going to be a great risk manager, and you're going to be able to trade these markets with an edge. The edge is the fact that you understand all the things that we've been talking about. That's what the edge is. The edge is that you understand liquidity, you understand imbalance, you understand waiting for candles to close, you understand session volume. That's your edge above another man who go, yeah, man, I just opened it. You know how much man I bump into, you tell me, yeah, bro, yeah, I trade. I know someone in particular that tried to tell me that they took 20 grand to 130 grand, trade in a 212 account, yeah, and they was telling me that they know everything about everything. And I was like, yeah, cool. I just asked them, what's their strategy? And the guy just said, bro, I'm not going to lie to you. Is when I see it going up, I just buy, bro. And then when I see it going down, I just sell. And I was like, well, so where do you place your stop loss in that? He goes, stop loss? What's that? So he said to me. And I was like, sick, bro. I said, bro, if it works, if it makes money, it makes sense. And I just kept it moving. Yeah? But let me tell you something for free. He's not going to keep that money. Unless he gets out of the game. Unless he takes his 130 grand, unless he's lying to me, and he says, you know what, I've had a good run, and he leaves, the longer he stays in the casino, not knowing what he's doing, he's going to give that money back. Plus some. I guarantee you that much. Because he doesn't know what he's doing. That's like me getting into the ring, and I accidentally threw a haymaker punch, and it accidentally caught Gervonta Davis on the chin, and he accidentally was knocked out. At that point in time, I might as well just take my win and leave. I might as well just say, even if he gets up, I might as well say, you know what, bro, I'm done, bro. I've showed you I can knock you out and let's leave. Because I know I did it by accident. I don't know how to do it again. I don't know how to slip his punches. I don't know how to keep my foot moving before his feet are moving and do it. I'm going to lose by the end of 12 rounds. We've seen it happen many times in boxing. Man get caught in the first round. He's not the better boxer, but he gets caught. If the other boxer could just tap out there and take his money and then say, yeah, I'm the winner, I knocked him down, he should do that. Unfortunately, boxing doesn't work like that. But in the markets, if you do not know what you're doing, you do not understand how to manage your risk, you will give back all the money you make. And the markets know this. The casinos know this. The casinos don't mind paying you out. You go into the casino and have a big win. You never go into the casino and have a big win and then you go to get your money and the man goes, he's making it hard for you to get your money. He doesn't want to pay you. They'll pay you. They don't care. You're one of many, many people that have been in that casino just giving them their hard-earned money over and over and over again. They don't care. They even know that you are going to give them back their money. You're not only going to give them back their money. You know what else you're going to do? Let me tell you what the kicker is, how the casino business is so beautiful. Let me tell you what you're going to do. You're going to go to the casino. You're going to win big. Go to the casino. You won $3,000. Yeah? You're going to go home. You're going to tell your brethrens. Yeah, bro, I went casino the other day, bro. It's crazy, bro. I've run $3,000. They're gonna say, what? They say, yeah, bro. I've won $3,000. It was crazy. I went in there. It's quick, bro. I just placed one trade, bush, bash, bosh. I hit the thing. Your brother's gonna say, bro, sick. When you go in again, I want to come. Because yeah, it was fun, bro. I enjoyed myself. There was gal in there. Man had 2 drinks. Blah blah blah. Your brethrens are gonna come. You're not only gonna come back. You're going to come back with your mates. And your mates are going to go to the cash point, take out their hard-earned money. You know why? Because there's a little voice in the back of their head saying, last time G-Van was here, he won $3,000 that he went and bought his car with, or that he went and bought a big chain with. That little voice is in the back of his head saying it is possible. And they're going to give the casino back all of their money. And even worse than that, G-Van's going to come back and start chipping away at giving him back his $3,000 as well. This is how it works. This is how the market works. So for us, we want to be in a position where we understand that. We understand these markets are here to take our money. So when we get a good trade and we use our edge and we prosper, we need to understand when we have won. We can't be out here thinking to ourselves that, yeah, boom, you know, we're just going to keep going on forever and ever and ever. Amen. I can remember when I was 10 grand up, so I'm going to keep trading, even though I'm at 92 grand and I had a day and I've just made 8 grand and I'm now 100 grand. In my brain, I can remember being 110 grand, so I'm going to keep trading through the whole of the rest of the day. If you believe that that's what's going to happen and that's how you're going to achieve, bro, you are wrong. You're in the ring for too long. Yeah? When you're in the ring for too long, you are going to take punches to the face. Yeah? And most of us we don't know how to deal with punches to the face. It's punches to the face in the markets. It's us losing over and over and over again. And your missus going, bro, allow that trading nonsense. You've got parking tickets. Your brethren saying to you, what are you doing, bruv? You're out here gambling your money. You looking at your life and thinking to yourself, does this thing even work? Is there a point of me doing this? All I've done is lost money. But what you have to understand is this. You are learning a language. You are learning how to trade. And if I said to you, you're going to go and learn how to be an architect, it would cost you time and money. I'm sorry. Forget about that. I'm going to go on YouTube and learn how to be a dentist. Well, really? Well, after you go on YouTube and do your dentist course, you're going to come and drill around in my teeth? No thanks. I want the guy who paid big money, went to university, had to do all types of course, all types of qualifications before he goes and I let him loose in my mouth with a drill. It's going to cost you. So right now, all you need to understand is you need to be present and you need to understand that what you are trying to do is learn a language. If you've got bills to pay and you think you're going to end up paying it after 1 week of coming into Jay's sessions, no. Even if you do manage to, by accident, it's not going to be sustainable because you don't know what you did. And remember, I can take a trade. Yesterday we marked up EJ. I took the, oh yeah, we're going to do that as well before we finish up. Okay, no, I should tell that we've got good time now. I can take a trade and you can take a trade and I make money and you lose money. Why? Because I know what I'm doing. It's just like I see mechanics just jump on the call. Right now, if I jumped in the engine of your car, I can have a fiddle around. Yeah, I heard a little knocking now. I can go have a fiddle. And maybe when I'm fiddling, I fix it for a little minute. Maybe I pull something out by accident, but the sound stops for a little bit. And everyone's like, I fixed it. I drive down the road, the sound starts rattling again. Mechanic can jump out of that car and realize, oh, damn, I must have knocked the XYZ loose, the spark plug loose. And he can fix it because he understands what he's doing. I drive down the road thinking I fixed the car, and it starts rattling at the bottom of the road. I don't know what I'm doing. I'm gonna open the engine again and just try and rattle some stuff around again. See what happens. This is the same principle with trading. Hence the reason why you do have a friend. Everyone's got a friend out here who says, yeah, man, I made some money doing this trading thing or trading cryptos or whatever it may be. Cool, bro, because the sun shines even on a dog's ass occasionally. Doesn't mean you're going to be able to repeat that. Doesn't mean that I've given you a fishing rod so that you can manage your risk. What does that mean? Being a trader and managing your risk. Let me show you what it means. It means that right now, for whatever reason, Mechanic has just come into some money because he's been grafting. All right. And he's gone and made £100,000. Yeah. Now, from that 100K that he's made, he can place this money in a bank. Barclays, Santander, whatever other bank you want to put, you can put 100K in. It's not big money. It's not 10 million. You're not going to be at Coots, trying to get a private meeting for your 100K. Yeah. You just put it in your savings account in NatWest. Now, what is NatWest going to give you on that money a year? Can anyone tell me what the interest rate that the banks are giving a year, roughly? Does anybody know approximately what you might get on your 100K?
5%.
Wow, that's amazing. Even if it is 4 or 5%, that is amazing. Didn't they say that they're dropping interest rates recently?
0.25.
Didn't they say they're dropping interest rates?
Yeah, they're dropping it to 0.25%.
So how are you getting 4 or 5? Okay, so cool. Let's just say for argument's sake, you're going to get a couple percent on your money. All right, I don't think it's 4 or 5%, but let's just say a couple percent. I don't know. I might Google it. All right, so on your 100K, after 12 months, you're going to make you're going to make £2,000, 2% on your money. Let's just say 2.5. Let's just say 3%. They're pushing the boat out. You're going to get £3,000 on your 100K. Now let me ask you. Let me explain to you why it's so important for us. Yeah, people that look like you and I, as well as anybody who's on this session, to be able to understand the financial markets to grow their own wealth. Because when you give them your 100K, let me ask you a question. What do they do with your 100K? What does the bank do with your £100,000? You just gone and taken it?
They invest it, or they give it to somebody else who's going to pay more money on it.
There you go. There, and that is a trade. Though that might not be trading the markets, that is a trade. They're using your money to make more money. That's all they are. Let's look. If you look at it like this, let me make it even sting even harder than that. Alex, last name's Williams. All right. So he has the Williams family. So all Alex has done is he's gone and worked his arse off, blood, sweat, tears. He's made 100K. He's come and given it to the Skeet family. That's my last name. That's what he's done. He's worked his arse off. All I've got is a shop on the high street that happens to be called Barclays, i.e. the Barclays family. That's who owns Barclays. The Barclayses. So Alex has worked his arse off, come and given the Skeet family, because there's, you can go and bank at Skeet Bank, PLC, and given me his 100K. And I said, thank you very much there, Alex, for working your arse off and giving me your money. And then I've taken his money and put it in the market to trade, to grow, or borrowed it out to somebody else to say, I'm going to give you this money, you're going to give me back with interest, only for me to, at the end of the year, after I've taken his money, and let's imagine that I make 1%, just 1% a month on Alex's money, then I've just made how much by the end of the year? How much have I made from Alex's money at the end of the year? If I can make 1% on it.
12%.
I've made 12K. And then I say to Alex, thank you very much. I'm going to give you 3K, which I think is magnificently high anyway, but we're giving you the benefit of the doubt. I'm going to give Alex 3K for giving me his own hard-earned money and me making 12K. I've just made 9K, which, let me tell you something for free. Your bank isn't making 1% on your money every month, I'll tell you that much. Yeah? But I've just made 9K off of his money. Now let's just put a 0 on that, and a 0 on that, and a 0 on that, and another 0 on that, and welcome to the banking system. So don't you think it would be great if instead of putting this money in Santander, that's only going to give you this number here, which in my opinion is fraff, it's less than this, especially if you take into consideration any fees or blah, 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 or you take into consideration the opportunity cost of you not having this 100K in your possession. What's the opportunity of cost of you not having this 100K? I tell you what it is when I approach Alex and say, listen, Alex, I've got a great opportunity for you to buy this property. It's only going to cost you 80K, and then you're going to make back 200K from that transaction. He can't get involved. He doesn't have 100K. Mr. Skeet's bank has the 100K, making loads of money from it. Yeah? That's the opportunity cost of you leaving that money sitting in the bank. It's not working for you. Say it again.
Try to get your money at short notice.
There you go. Well, then, and the whole point is that the reason why, if you try and get your money at the bank in short notice, and if everybody went to the bank, if, for example, something happened and we all wanted our money at the bank, the reason why there'd be a problem, like we've seen in Greece, like we've seen in other countries, like we've seen in many, many other countries, is because they don't have your money. It's one big move. I don't have your money, bro. The money you gave me, I know it should be here waiting for you, but actually, I actually put it in the market, so it's doing this. I tell you what, come back for it. Come back for it, I'll try and sort something out. That's why you hear people talk about the banking system like it's one big Ponzi scheme. It is. Your money's not sitting there. Your 100K is not sitting in a vault waiting for you to come back and get it. So the point I'm making to you in a nutshell is, wouldn't it be great if you could take this 100K and you could place this in an account and you could work out how to make 1% on your money every month? Or, God forbid, 2%. Or, God forbid, 3%. Now, let me tell you something for free. When Alex puts his 100K in his bank, in a trading account, he better understand that what he's trying to do is not to be God's gift to the markets, being able to trade out of his ass like he's the X-Man, an Avenger for trading, and he's got superpowers. No, he better understand that if he goes back to wifey and says that he's blown 100K, his whole life is going to end. So his first number one priority is going to be what? What is his number one priority about 100K going to be?
Capital preservation, keeping it.
Capital preservation, and that is whittles down to risk management. Because let me tell you something like this: you can put 100. I'm telling somebody the game. You ready for it? You can put 100K in an account, and you can make a hard stop. So you can say to your missus, or you can say to your brother or your mum, if I lose £10,000, 10% of my money, I'm going to pull my money out of this trading nonsense, and I'm going to go and put it in the savings account as you told me to, and leave it alone. So therefore, even if I put 100K in and I understand how to manage my risk, I'm only risking 10K. So it doesn't seem as bad. You can blow 10K on bills. You can blow 10K on a holiday. You could blow 10K on trying to buy a new car that nobody cares about, that sits outside your house, and nobody doesn't care that you went and bought the best car on the parking lot because you're not going anywhere anyway. Blowing 10K is nothing, but yeah, you're leveraged your 100K. You've got a hard stop of 10K. If your life just goes terrible for your trading and you lose 10K, at that point, because remember, you can put your money out of a trading account anytime. Once you've put your money with somebody reputable. So you put 100K in the account. Now let me tell you something. When I've put 100K in my account, I'm not going to be trading it at 1%, $1,000 at a time. That's only giving me 10 goals to get it right. I don't need to go in that hard. I can trade £100 at a time. Let me put it into perspective for you. How much money do you currently make in your life that's allowed you to buy all of your shiny things, your lovely shoes, your lovely watch, your house, your car? How much money a day do you make? I'm going to put it out there, and I'm going to go and say this, and I don't even know. But let's just say, for argument's sake, that there's somebody out here, and I don't know, is that a good number? Is this too much of a number? I think maybe it is too much of a number. I don't really know. I don't get paid.
That's way too much of a number.
Give me a number.
I'm about £150 a day. Yeah.
Okay. I like that. That's good. So let's say £150. You make £150 a day, but let me show you what the opportunity cost of you making that money is. What time does the average man wake up to go to work? Somebody tell me. What time?
6 in the morning.
5, 6 in the morning. So you're up 5, 6 in the morning. You have to wipe the biscuit out of your eye early in the morning. You got to get showered. You got to go and buy some hard shoes to make sure your shoes are shining for you to go to work. You got to put those shoes on. You got to travel by train, by bus, by plane, whatever you're doing to get to work. You got to listen to your manager. Most people who work for somebody else chatting absolute nonsense in your ears, dealing with, a lot of people don't like where they work. It's just somewhere for them to get money. Some people are fortunate enough to love their job, and well done. Yeah. But you got to go and deal with all of that headache, all of that pain, all of that stress, all of that aggro. You got to go to lunch. Because bearing in mind, when you traveling to work costs you money. So your £150, how much? I don't know what travel or what per week is. I don't even know. All right. So let's minus that money from the money that you're making a week because of your travel. Then you got to eat. Yeah. So whether you're making food at home or you're buying food at lunchtime, you got to eat. Then on the way home, you also buy another little sneaky little snack because, everything's in your face. You got to eat. And then you got, you travel, you got to commute. You don't get home to what? I don't know. 6? Does everybody get home at 6? I don't know. All 450 quid minus all of your costs. Let's just say, for argument's sake, let's make it 120 quid off the costs, or 130 quid off the costs. So when you put that into perspective, that you are currently out here in the world working and wasting your life because you can't get back time for 130 quid a day. Oh yeah, I forget about national insurance, tax, and pension contributions. Yeah, forget about that. Let's just pretend that doesn't exist, which it does. All right. You got to think to yourself, is it in my interest to get an edge, to learn an edge about these markets so that when my 100K lands, I can put it in the market, and you know what I can trade it at? I can trade $100 at a time or $50 at a time. On the basis, I'm only trying to get more than £120, Because if you can make £120 in your pants at home with your family or on a beach underneath the coconut tree with an internet connection, well, you're doing just as good as you're currently doing, if not arguably better, because you don't have to go and commute in the cold and deal with your HR person chatting rubbish in your ears. Yeah, you can work in your own time in your underpants with a daiquiri in one hand and make from that $100 trade, even if you made a 1 to 2. Forget about 1 to 10. A 1 to 2 trade means that you're going to make $200 on your $100. You're doing better than you're doing going to work. You're doing better than what you're probably doing going and studying for the job that you're currently in. Sad but true. Hence the reason why you have seen my dedication to mastering my edge to this has been unwavering. Because even though I've worked for myself since I was young, in the property industry, I can see the value of me being able to walk with my laptop or my phone and be able to take $100 and turn it into $500 on my time. I can see a value in that. Now, is that going to come easy? No. Am I going to learn Japanese in a day? No. Am I going to learn how to be a dentist in a day? No. Am I going to have to dedicate myself to this and understand that this is a marathon, not a sprint? Yes, but let me tell you something. You see, when I get to the destination, at that point in time, I am winning with a H. And I am able to teach my son and say, bro, forget about going and working at Gap when you're 16. Forget about going and doing this. I'm going to show you how you can take money out the markets from your computer so that you can choose to do whatever you want to do. This is why this is very, very powerful, guys. Forget about the trader that you see on Instagram and he's just bought a Lamborghini because he's just taken an 800k trade. Forget about him. Let's just live in your shoes. Your shoes are you're currently going to work all day and you're potentially after costs and NI and tax making £120. Maybe. I say that, maybe. So you need to ask yourself, can you work on your own terms and be able to achieve this in another way by investing your money? And at the moment we are day trading, but everything we are learning allows you to invest longer term, allows you to swing trade, allows you to buy cryptos, allows you to buy, because now you're going to know what you're doing. You're going to understand about premium, discount. You're going to understand about momentum. You're going to understand about volume. You're going to understand about news and fundamentals. It is an extremely powerful thing, but what's happened is the industry has got very distorted. I had the other day I went boxing. The guy who I was doing boxing with goes to me, oh yeah, I heard you do this trading thing. Yeah, but listen, so I want to get involved still. So how long am I going to be, how long is it going to take for me to see some real money from this thing? Obviously I've got X amount of money. I really want to get this amount of money. How long do you think I can get that in? I said, bro, you might as well forget about that if that's what you want to do. So I said to him, I said, that's not how it goes. I said, you're trying to learn a language. How long does it take for you to learn a language? He's like, no. I said, if you want to give your money to something, you want to give your money to me, then I could potentially give you some sort of estimations of when you can maybe be able to see a return. But if you're trying to learn how to do something new, explain to me what thing in life worth doing can you do quickly? Just tell me what it is and let me know, because whatever it is, I'm going to go and start doing it today. Can somebody tell me what it is? Dwayne, can I become a mechanic with everything that you know? Can I do that today, please, so that I can start getting paid the call-out charges that you're getting paid? Can I master that today?
Take the 20-year pill and you can come and get it.
20 years, damn. What else? What else is somebody else doing? I don't know. Somebody else, Sister Abana, with her understanding her spiritual healing and the things that she does, etc. Well, can I get that knowledge today and start charging clients outside on the road £150 per session today to try and get that money? It doesn't work like that in life. But people come to trading and they think it's different. You know why? Because Instagram got them crazy. Seeing guys do it. And remember, most men on Instagram can tell you stories. They can, because it's like everything on Instagram is a story. Yeah, them girls don't look like that, bro. I'm telling you for free. You see that girl on Instagram? Go and see her walking in the street in Stratford. She's a hot mess. But from the right angle on Instagram, she's amazing. And it's the same with trading. So I'm telling you right now that we are in a great position to be able to understand how we can manage our risk and we can slowly grow our wealth. Now, are we going to have great days like EJ, which we're going to go into right now? All right. Yesterday was a 5-figure day. Okay. Let's understand this trade, because the reason why I do these sessions in the morning is number one for me. Yeah. See it how you want to see it. Hear it how you want to hear it. Like me, don't like me. I don't care. I was born by myself. I'm going to die by myself. I'm here in the mornings for me. So that means if I come on the session, it's only me and Jivan, or me and Jason, or me by myself. I don't care, because I'm here for me. Because I have to be here for the London sessions so that I can trade the markets. Why am I saying it to you like that? Because I'm showing you that this thing is about your own dedication and your own story. You get it? It's not about what somebody else is doing. It's about your story. What are you willing to do to be successful? Are you willing to show up? If you're willing to show up, you can achieve. If you're not, live your life, do whatever you want to do. It doesn't affect me. Yeah, it doesn't affect me. Yeah, it doesn't affect anybody else. It's down to you. Okay. So yesterday we looked at this market in EJ and we said the exact same thing what we discussed today. I went through. We need to understand the overview of the markets. So for those of you who don't know where to start, what I offer every single morning is priceless. Yeah, because I'm showing you firsthand of my process. That's like you're a plumber, and instead of just reading the books, you're able to see what a plumber does first thing in the morning. He goes in his bag, he checks his equipment, he makes sure everything's charged because he doesn't want to get to the client's house and his drill's not charged. Because then at that point in time, he's got to go home. Yeah? So you're being able to see firsthand of what you can do. Now, I'm not trying to say that I am the absolute, Elon Musk of trading, blah, 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 but let me tell you something. I'm a good place to start. If there's somebody out there who resonates with you better than myself, by all means, get your education from them. This isn't an ego thing, because it's not about my strategy is better than your strategy. Trust me. If there was a golden strategy that once you learn this strategy, everything's good, there'd just be one strategy. I'm telling you. Somebody would have spilled the beans on that strategy and it would have spread like wildfire. It doesn't work like that. It works about understanding the language. Can you understand this? If you understand it in a certain way, because that's how you learn or that's how you've been taught, then that's fine. It's still the same language. It's like maths. Certain people do algebra a certain way. And then certain people do algebra in another way. You're like, rah, I've never been taught like that. I can still do 2 times 2, but I didn't know you could do it like that. Using the knuckles on your face. I see man do knuckles, the kids do this one, or the days of the year, or the month of the year, they use their knuckles. Okay, I know it's January, February, March, April, but I didn't know, or I know how many days are in the year, that's it. Is that what I'm talking about? Yeah, how many days are in the year? I've seen some kids do something where on this knuckle and that knuckle, there's 31 days over. Okay, cool. I didn't know that's how you can do it, but that's a great way that you learn. I just need to be able to do it. So if somebody else resonates with you more than myself, by all means, get that education. But for me, I teach, we're on a journey together. You get it? And when I learn something new, or when something reveals itself and the market changes, I tell you. Yeah? I don't not tell you. That's not course number 2. It's going to cost you an extra $59.95. I'm here. Yeah? So we looked at EJ yesterday and we said, we want to understand what's going on with the markets. Yeah? Now, this market is trading within this bigger range. Okay, we can see a bigger range this market's trading at, yeah, making higher highs and higher lows and higher highs. And even here, when this market is coming down here, we understand that this is a retracement of an overall bullish energy. Now, I don't really like taking trades from in the middle of a market, okay, because in the middle of a market, we are neither in a premium nor a discount. But this is relative to whether we are day traders, swing traders, you understand, or scalpers. Because ultimately, what happened all the way back in 2016 isn't going to have that much bearing on if I want to take a trade right now and get out in 15 minutes. Doesn't have that much bearing on it. Yeah, but we still want to know what's going on in the bigger picture. The second bit of our confidence that we understand is this outside candle situation. Because remember, the world is changing on a daily basis. So if all of a sudden we start seeing big red candles, it means something went on yesterday. So this is we're taking the day before. Something went on yesterday, the day before. This was Friday. Yeah, something happened in that market before where the momentum was tremendously bearish. We're going back in time today. We're not talking about today. We're talking about the trade that took yesterday, which was a big trade that we all reviewed. Okay, we all was analyzing, and some of us got in the trade, some of us didn't. All right. I'm trying to rewind this. So we've seen this big outside red candle. Okay. Now what that means to us is this. This is what it's not the be all and end all. There is nothing in trading that's the silver bullet. That once it does this, it's doing that. No. But this adds some confidence that we've seen an outside red candle. We anticipate that the next daily candle is going to be also a outside red candle like this. This is what we believe. We believe that the next candle, based upon it being an outside bearish candle, is going to be another big red candle like this. This is what we believe. This is what this is telling us. Okay. However, in that journey of achieving that process, we understand that the markets hate inefficiency and imbalance. Yeah, it hates it. It makes it be a crap market, which we was going over earlier today, saying that, you know, if you went to a market and they didn't serve you because the price moved so quickly through an area that you'd never go back to that market. So this imbalance, the markets like to close. They can sometimes just close 50%, saying to people, look, I'm sorry, I can't give you the price what it was previously, but I can at least go, you know, meet you halfway, 50%. Yeah, because where this candle opens, if we believe that this market is going to be a big red candle based upon a previous candle, any sell above the open of this candle, any sell above the open of the next candle would be a good sell. But we are conscious that the market may first close the imbalance before selling. So as a day trader, when we're quite small, it makes us think to ourselves, there may be an opportunity to buy into a sell. All right. Now, that's just one bit of confluence. So I've already got that now. I'm thinking to myself, okay, there's an opportunity I could buy into a sell. Let me move this out of the way. Okay. Now, I need to understand what moves the market on a daily time frame. What moves the market on a smaller daily time frame is something that we call liquidity. It's liquidity. I want to take your money and make your money my money. I don't care whether overall we want to go down. I want to steal the money from here first, then run in the direction I want to go in. So therefore, on a smaller time frame, if I drop my time frame down to, let's say, even straight to an hour, trying to save some time, I'm looking, make sure we're on the right day, this is Friday, I'm looking for reasons to get in this market, all right? So I'm going to start pushing this forward here. So we can see here, this is Monday now, all right? This is Monday. I'm going to brighten it up a little bit. The indicator that you can see with different colors, as I mentioned earlier, is simply a sessions indicator. I simply use it for the sessions and to show me the kill zones for different sessions. Now, I could put a label on this, but it starts getting lots of labels in here. But just understand this. Red is Asian session. Yellow is London session. And blue is New York session, AM and PM. All right. So this is Asian session on a Monday. All right. So we've just come into the markets. We're thinking to ourselves, okay, is the market's going to be a bit volatile? What's happening over the weekend? Blah, 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 blah. All right. Now, we understand here that below session highs and session lows, there is something that we understand is liquidity. So I can take my little line here, for example, and I can do this, have a look. And I can label it for you guys. I know my red line is liquidity, but I can label it. So on the right hand side, it says liquidity. There's the liquidity here. We can see there's a New York session low over here, which is liquidity. We can see a London session high over here, which is liquidity. Okay. We can see another Asian session here, high over here. There's liquidity above there. There are pools of money above these levels. All right. So now we're sleeping. This is sleeping. We're sleeping here on Monday night, having bed, you know, getting a nice sleep. Then we're seeing that the market's opening here at 5 o'clock, 6 o'clock. This is Frankfurt. Now, London session is opening here around 7 o'clock. And we want to see what happens now. Think about what's happening. London session. Traders are coming in, taking off their shirts. Taking off their blazers, sitting down at the tech, getting ready to start executing orders and doing something. They wasn't doing it on a Sunday night because the markets were closed. They wasn't doing it on Saturday because the markets were closed. But London sessions open and all the London men now are coming and sitting at the table. We want to see what happens. We want to understand, okay, does this market want to take some liquidity to push in the direction? We're day traders. We're just trying to steal some money. We don't need to be right for the next 3 days. We need to be right for the next, 30 minutes to be able to say that we've made our £120 or whatever it is our target is for the day. So London sessions opened here. Okay, and we can see that London session kind of open in the middle of nowhere. Let's see what happens. Let's click things forward. I'm on a 5-minute time frame. All right. Delicious. We have seen that the market has just been pushed down within London session, which is the time that we want to trade in. Why? Because that's when there's volume in the markets. You don't want to go to, like McDonald's, not to say that I eat McDonald's and you shouldn't eat yourself. But let me tell you something for free. You want to go to McDonald's when it's active. When there's lots of volume, whatever time frame when McDonald's is active, that's when you want to go. Because there's burgers coming off the thing hot, coming off the thing fresh. So when you come in there, that's why it's called fast food, or they changed it now. It's no longer fast food, supposedly. I heard they called it something cool. It's called something else now because they're trying to say that it's not fast food since COVID. But anyway, you want to be in there when there's burgers coming off the. You don't want to go in there at some mad time and there's a one cheeseburger that's been sitting on the top there. You say, "Have a cheeseburger," and he goes, "Yeah, no problem." And you're like, "Yo, bro, when was this cheeseburger made, bro? It's kind of feeling a bit lukewarm, bro. What's going on here?" You want to be in the market when it's active. When London session kicks off, there's lots of volume in here. You want to be here. This is the time. Yeah? Just like when New York session, that's why you hear people say, we trade London, we trade New York. That's when it's active, when there's lots of active participants. But we've just seen here, look, liquidity from below this Asian session area here, just been taken. Nam, 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 nam. I'm going to change that line to saying liquidity taken. Over here, it says liquidity, what should do? If this moves out of the way, say liquidity taken. All right. Now, when liquidity is taken, I start to look for certain things. I want to see a break in structure. And a break in structure for us is, it takes the form of two letters. Does anybody know what those letters are? Yeah. Of what identifies a break in structure. What are those letters? Let's go. What letters do they take? What shape? Come on, let's activate. I want to get that participation. I know I'm asking.
M's and W's.
M's and W's.
Yep.
All right. So when the market is doing this, coming down here, doing this, I'm just drawing a market. Nowhere yet have we made a W. Unless your handwriting is like you've got issues. There's no W's here. Have a look at the W. Now all of a sudden, this market was making. Look at my dots. Lower lows, lower highs, lower lows, lower highs, lower lows, lower highs, lower lows. Let's imagine it just took liquidity from here, because it's not just about a W and M anywhere. It's after liquidity has been taken. And then all of a sudden, the market starts to do this. Makes a higher high. So he was making lower lows and lower highs. Now we've made a higher high. And then we may see this market come and do this, tap in to the middle of our W, which is a potential entry for more aggressive traders, make a higher low. And then do this, make a higher, the market has changed. So if we go back to the concept of after liquidity is taken, the market wants to run in the opposite direction. Well, nam, 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 liquidity is taken. And all of a sudden we see a bloody higher high turn up. That is another bit of confluence where us, as we have an edge, we go, okay, something may be happening here. Yeah, we don't know. We don't know for a fact that something's happening here, but we are looking at it and we are trying to read and react to what the market does. Okay. All right. So we can see this market in here. The market takes liquidity, and then we start having an argument. Look, start having an argument. In here, all of this side, I'm gonna fade this out a bit so you can actually see the candles. All right, I mean it's 95. Fade it out a little bit. Fade out the London session block. In here, we start having an argument. The argument is: should we go up? Should we go down? Should we go and take some more liquidity down here or not? That is the argument that is happening. Now, us as traders, we have to be able to look through the smaller time frames to see, because look, on a 2-minute time frame, there's no structural here. Yeah, so it's only on a very small time frame here that maybe we're getting some little kinks here. There's a little bit of structure here, a little kink, yeah. And ultimately, have a look. As that market came down here, let's have a look. I'm trying to show ya. We're thinking to yourself, is this a manipulation W in here? Maybe. It's not gorgeous. Yeah, it's not gorgeous, but we can see how the market, have a look here. Have a look here. And this is where I believe yesterday, if I remember correctly, I got in first after seeing this market take this liquidity and make this ugly manipulation W. It wasn't great. but the entry was here for me, because I'm an aggressive trader. I don't wait until the correction continuation. Well, sometimes I do. It depends, and that's another conversation. All right, I got in here with my stop below the lows. Here, especially because I've got the confidence that the market may want to retrace to close the imbalance. B, I've seen the market take liquidity. C, I've seen a break of structure, which wasn't great. I'm not going to lie to you. So what I did with this, as soon as I got in this trade and this market started to push up, I made this risk free, meaning I moved my stop loss to here. I made it risk free, meaning that I can't take an L because I wasn't fully convinced. And I don't want to take a loss first thing in the morning. Let's have a look and see how it played out. All right. So let's pause it there. All right. Let's pause it there. This trade, remember yesterday I was on with the guys and I said to them, this trade's doing well. This trade for me got up to like, if I can remember correctly, maybe about $1,000, $800, $1,000, okay? And I was like, yeah, it's doing good. It's doing nicely. I'd already made it risk free. Remember our strategy. When we get to 1 to 3, we take off 50% and put the profits in our pockets and we make it risk free. So either way, I'm now in this trade, hoping that it goes and closes up the imbalance and pushes up higher. Where is that imbalance? And where is it I'm talking about? Have a look. On our daily time frame is this whole gray box. I'm hoping that we're down here and this market's going to close all the way up into this gray box and then start to turn around. But I'm watching it. All right, I'm watching it. Okay, obviously we can see the hindsight of this wick, but at the time that wick hasn't formed as yet. Okay, and the market, what it actually did is, as you can see, our entry, I'll go back to my 5 minute or 1 minute. The market pushed up here. I was in good profits. I remember I squeezed it up whilst I was on the call to you guys. And I said, you know, I'm not really managing it well, so let me squeeze it up. And I think maybe I took about $500-600 out of this market. Have a look at it as the market continued. All right. Now, at the time, I was like, look, I wasn't fully convinced of how this market broke structure here, but I took precautions. I took money out of the markets, and that's what counts. Because this is not about you're a guru, you know what the market's going to do. It's about understanding how to extrapolate money out the markets. But we continued. We waited. We sat around, had a look and see what's going on. We were thinking to ourselves, okay, the market's come back down in here, pushed up to 50% of this little area here, pushed down here. We continued watching it. And then we saw a more compelling break of structure. So here was we had a little reaction to this liquidity. The market came back down here and we saw a more compelling break. I'm trying to make sure that it's the same one that we did in the education yesterday. All right. Just looking, give me a second. Because I don't want to make up stories. All right. We can see a previous battlefield over here. All right, this is a previous battlefield. What do I mean by that? I mean a previous high that the market couldn't break and then broke through it with strength and speed. That's what I mean by a previous battlefield. All right, I'm just trying to make sure that we are accurate. Okay, and if I go back to my 2 minute or 1 minute, now you can see a lot of the time, guys, I use my line charts. I just use my line charts because sometimes the candles can be quite distracting, but I flick. You notice I flick between the two because the line charts do not take into consideration necessarily the wicks. Yeah, they take into consideration the bodies of the market, not necessarily the wicks. Okay, so we saw this market come down here again once again and start to break some minor structure in here. This is minor 1 minute structure. So we really first had a little bit of a fake out, but remember my overview thought process is that we're still going to get that push up to close that imbalance. So I'm still looking for a potential buy. So when I saw this market break this structure with another ugly kind of manipulation W, all right, here, I wasn't fully convinced, but then I saw this second one here, another little break, and I'm thinking to myself, look, this was an ugly one, but here is a potential other one. I said, you know what, cool, I'm willing to get involved now. Here is an aggressive entry. If you're aggressive like me, maybe you take this trade. Now, all aggressive means is that you are tough enough that if you get stopped out, you can get back in. If you're not tough enough for that, your stop goes below a swing low. Yeah? If you're not tough enough to deal with that. Okay? You see what happens? Let me speed it up because I ain't got a week. Okay, 1 second. Okay, sorry, wrong trade. Yeah, apologies. Yeah, so we was in here. We saw the market come first down to a previous battlefield. That's what we spoke about yesterday. This market came down to this previous battlefield, which is over here above this level here. All right. Yeah, I knew that had something to do with it. And we saw the market come and tap into our previous battlefield and then start to break structure. Okay, so from here, when we saw the market, because remember, yeah, sorry. So remember, this market took liquidity over here and had a reaction. All right. Had a reaction already. So imagine you're a thief, as we said, taking the liquidity, having the reaction, and then falling away. You're thinking to yourself, why is the thief back over here? Why is he back over here? Well, he's back over here because he's coming to see some other areas of liquidity, some other points of interest. All right. So when we saw this market come down and sit on top of this previous battlefield, which was a previous New York session here, that the market had to push through with strength and speed. This becomes a point of interest. And from that place, when we saw, also we can still see liquidity over here, that the market could decide it wants to come down here and eat that liquidity. Yeah, definitely could. But we are reading and reacting to what we can see. Hence the reason why sometimes when we use our lines, it's going to help us. Because watch, if I draw some lines like this, touching the last high before the lowest point, this is now breaking outside of the trend. You see it? That energy here, all this is breaking outside of the trend. Okay. And if we go and we knuckle down here, we can see that when the market came down here, tapped into what we're tapping into, it actually made a manipulation W here at the bottom in here. If you're looking at it on let's look at it on what time frames. We can see one on a 1 minute time frame here. I'm going to try and circle them. Yeah. After, look, remember because that previous battlefield. Yeah. We can see a 1 minute time frame here. We can see it on a 2 minute time frame here. We can see it on move this out of the way. On a 3 minute time frame here, but it's ugly. I'm trying to move this out of the way. Let's have a look all the way on a 5 minute time frame and see. Yeah, we can also see it on a 5 minute time frame here, but it's ugly. I'm trying to move this circle. It's not allowing me to. Here, boom, 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 on a 5 minute time frame, a very, very deep retracement, but retracing into a smaller 1 minute. So when I've seen all of this, I've said, you know what? Potentially, I'm going to take another jab. I'm a risk manager. I've managed my risk. I'm only trading what I'm willing to lose. Okay. And then we've seen this level in here, had a market come back in, tapped in, had an argument. And then we start to see the market pushing up and slowly but surely breaking, pushing above some structure. Let's play it forward. Let's see what happens. All right. Long conversations happening, slowly but surely. Let me come out to bigger candles. We've seen this market where are we now? This is New York session. All right, we've seen this market push. All right. Now remember, we've got to look at the bigger picture. The bigger picture is that we was only thinking, this is us going back in time. Yeah, we was only thinking that this market could retrace up into these levels. Okay, retrace up into these levels. Could retrace up into these levels, this imbalance, before turning around. Now, what evidently happened that we can see here now, all right, is exactly that. The market, this big red candle, because we're talking about the previous day, pushed all the way up into here, into this green candle, yeah, all the way up into here, in here, and tried to get back down here and close as a red candle, but didn't quite make it. This was the trade. That was yesterday's trade, pushing up into, obviously this is daily, it's showing us the current candle. But if we was to go back on our, because we're back in time here, if we was to go back in here, this was the trade of us taking this trade from not there, from in here, from the open, trading this push up to close the imbalance and understanding at some point this market's going to come down here, which it did. At some point, this market pushed all the way up here to this green wick and then pushed all the way down and didn't close as a red candle, but closed over here. Yeah, it closed over here at this level. But don't get it twisted. This push up, and if you was able to catch it coming down here, is a big trade. Okay. Now let's go to present time. All right, let's go to our present time and understand the markets that we was looking at today, that you guys might be able to take trades for yourself. Okay. So if we go and look here in, say, for example, gold has showed us a big red outside candle yesterday. All right. Big red outside. If I go to refresh this, has shown us a big red outside candle yesterday. Okay. Let's close this. Yes. Outside candle yesterday. Now, anything above this level would be good for a sell if we believe that gold is going to make another outside red candle. Unfortunately, the gold opened here. We had a little tiny little energy up in here, which was in Asian session, was all sleeping, and the market already started running here. Doesn't mean it still doesn't want to do this. It doesn't mean that. Okay, we don't know. But what I do know is this. Remember when we looked at the gold market from a bigger picture? We are in a premium. So ultimately, I want to be selling this market. We're right up here in a premium of this range. Look, right up here in a big premium of this range. So ultimately, I do want to be selling this market. But in the back of my mind, I am thinking to myself that even if the market wants to go down, it may first, because of this this imbalance, we may push up in here first before we come down. Now, at the moment, we haven't done that in London session. We've started running. Okay, have a look. We've started running. But you've also not heard me turn when I say that I'm in a trade. Because we've started running here. We've started taking liquidity from below. Yeah, it's dropped down to our 15-minute or 5-minute time frame. We've started taking liquidity from below. But when we took the liquidity, the thief didn't run in the opposite direction. It said, nah, not enough. Push down here some more. It's saying, nah, still not ready to go. We're still not scared enough to have to run in the opposite direction, yeah, and give us a potential move. So I was watching it, thinking to myself, so where are you going? Well, where is it going is me being able to identify where there is more liquidity. For example, right here on this red line, which we are currently pushing towards. So right now, I can now mark this red line also as liquidity taken. Now, does that mean that this market is going to turn around right now, fly into space? No, it doesn't. Doesn't mean that. But it at least gives me a reason to say I'm going to be looking at this market with a fine-tooth comb to see if I get my break off structure. If I see a lovely manipulation pattern happen, especially if I can see this leg push out with strength and speed, then I'm going to figure to myself, maybe there's an opportunity to tap back in here to go. Because right now we can see the imbalance that I identified, which is that gray box, has definitely been closed. All right. As well as liquidity from up here has been taken from previous sessions. And now we've taken another session here. So at some point, I'm expected to see some sort of reaction in this opposite direction. Now, whether or not that reaction pushes all the way up, going back to my daily, pushes all the way up and closes this whole imbalance, whether or not that happens or not, I don't know. I haven't got a crystal ball. All right. But what I can say is that we have had heavy selling, and there's inefficiencies above, and we're taking liquidity from below. We're taking liquidity from not only below here, but below this massive swing low. And as we know, when markets take liquidity, they like to run in the opposite direction. So even if this market wants to start coming down, which is what I expect because we're in this big, massive premium, I'm expecting it to come down like this. Break liquidity, take liquidity, then make a retracement. Then push down, take some more liquidity, then make a retracement. Then push down and take some more liquidity, and then make a retracement. That's what I'm expecting to happen. So if you really want to think of it, if that's what I'm expecting, well, it's just taking liquidity from this swing low by coming down here, as well as on a smaller time frame, taking liquidity from session lows. And does that mean that it's going to necessarily come here? It's not a foregone conclusion. This market could just say, you know what, Jay, geez, after the elections, we're just going to keep coming down here. Could do. I don't know. But I'm now looking at this and thinking to myself, is there an opportunity on a smaller time frame whilst liquidity's just been taken, for me to see an indication correction continuation, to see a lovely, manipulation W pattern turn up sometime now, because I can't just get in for the sell now. If I get in for the sell now, where am I going to put my stop? If I can say, well, it's up, because this is what retail traders do. Oh my God, look at it, it's going down, it's going down. This is what everybody did when cryptos, in the last crypto season. Everyone was like, have you seen Shiba? It's going to the moon. And then after it's already gone to the moon, you went and hit the button to get into to go to the moon. But it's gone to the moon already. It's ready to turn around and go back home and go and do something else. So we can't just get into this now after this market's been selling. We can say, well, the momentum is bearish, and therefore we're going to wait for it to push up into a level and then sell. Yeah, that's possible to say. Or we could say we're going to buy into that energy, that bear, that wherever it may sell from, which is what I'm talking about at the moment. So look, we've taken liquidity. And after seeing all of these red candles, look, 1, 2, 3, 4, 5, 6, 7, all of a sudden we're starting to see a green candle that closes in 15 seconds. All of a sudden, we're starting to see a little green candle, is that a coinky-dink that we're just taking this liquidity and now we're seeing a little bit of a green candle? I don't know, we've got 3 seconds before a candle closes. Now, I'm not getting excited. I can't just jump into the trade head first. I'm watching it. I'm thinking to myself, okay, we've come all the way down here. We're getting our first little green candle. Are we going to get a manipulation W turn up? Are we going to see a nice strong push out? This is what I'm waiting for. If I don't see these things and I don't get in the trade, then good. You still get marks for that. You get marks for working out. You get marks for being patient. You get marks for deciding that you don't want to get into a trade. There's no problems with that. All right. But we're watching it. This is what I would be doing. I'd be watching this trade right now, seeing if it's going to give me what I need to see. Because there's no structure here. It's just the first part of structure on a 1 minute time frame. You might as well say is probably already all the way up here, and that's not very great. And then we've got here, and then we've got here. To visible to the eye, you can't see any 1 minute structure here. But if this market then right now does this, well then this doesn't become structure, right? And then it does this, making a W, and then it taps in like this, and then it does this, but then now the market's doing something different. Do you get it? At that point, the market is doing something different after taking liquidity. All right. So that's what I'd be patiently here waiting for. So I'm going to pop an alert in here below. If the market decides to make a nice right shoulder, add an alert crossing down. I'm also going to pop an alert above. If the market says, screw you, I'm just going to leave. Maybe it's making this breaking structure on a 30 seconds time frame. Maybe we need to look here to see structure. And it's making a lovely manipulation W in the 30 seconds. I don't want to be in the 30 second time frame because I've got to have some sort of rules, and I don't want to look at these markets, especially gold, on a 30 second time frame. To be fair, on a 30 seconds time frame, we can see gold making a manipulation W here and pushing up and tapping in. Can do. All right, we can see it there. Do I want you guys in here taking trades on 30 second time frame? I don't. All right, so we can see this on the 30 seconds time frame, that after all of that red pushing and liquidity taken, we can see a manipulation W in here on the 30 second time frame, which is here, that the market did tap into with a lovely wick, and then it's now pushing up. Yes. Yeah, I'd prefer to see on a 1 minute time frame. I may not get what I want. All right, I may not get what I want. Okay. I'm watching it pushing up. Yeah, I'm not gonna push you guys to take 30 second trades. Some of you don't even have access to 30 second time frames because you're not paying for trading fee. All right, so I'll be waiting patiently. We'll see what happens. Even though the market is having a little bit of a reaction. All right, let's see if it gives us an opportunity. All right, see if it gives us an opportunity on a smaller time frame. Okay, I hope you understand how I've broken down that whole gold chart. I hope you understand why I said to you I'm waiting. I hope you understand why I'm saying that maybe we may have missed it because there's been a 30 second break. Look, market was coming down here. Look, can we see any manipulation W's? Nope, 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 nope. All of a sudden we see one after it taking liquidity. The only thing is, I don't want to encourage you guys to be taking 30 second trades. But here we can see a push out, a little bit of strength, tap in, nice wick tapped in here. So our entries around this area here, boom, our stops below the lows. And right about now, we would be blue. Now, whether that blue is going to be able to push up and break this structure before first pushing down and giving us a lovely manipulation W on a 1 minute or on a better time frame is arguable. We don't know. All right. But on a 30-second time frame, because these markets are fractal, they do the same thing over and over and over again, we would have been in right now and we would have been in the blue. Why would we be in right now? Because we're only taking a trade after liquidity is taken, because we're only taking a trade when we see a manipulation and breaker structure, and because we understand that this market may be trying to push up and do so. That's the reasons. Now, whether this trade is going to be the one that goes to heaven and just makes you a gazillionaire is irrelevant. Yeah? If not to say that you have or anybody should have got in this trade, at the point when this trade gets to a 1 to 3, you're supposed to be saying, I'm taking off 50%. Yeah? Oops. And I'm making it risk-free. At the point which this trade comes and stops you out, you're supposed to not care because it's well within your risk. You see? So right now I'm just watching this because the market has taken quite a lot of liquidity from up here. So I want to see a nice manipulation pattern before I get involved. I'm not going to get involved, just early. Yeah. So I'm not in this trade. Don't think that you're missing out. You're not missing out. Okay. And this is gold as well, guys. So understand gold, don't play. Yeah, it can get very volatile. Let's have a quick look at some other pairs before we finish. Is there a pair that somebody wants to look at before we finish up? Is there a particular pair?
I just want to look at Euro USD. It looks like it's at the bottom of a range. So
let's go look at Euro USD. Euro USD on Awanda. Now, when I look when I was reviewing them early, I put Euro USD as a ever so slight outside bearish candle. Let's see. Let's get rid of this. Let's see if that's the case. Let's hit refresh here. All right, so we had this outside bearish red candle on Euro USD, and I'm thinking to myself, I've identified an imbalance, and I've identified that anything above the open here of that candle, anything above would be good for the sell. We had a little push above and some wick action. I don't know whether it was an Asian session or what, but we still got this imbalance that didn't really come and close up this imbalance. If we say, let me just go here. Not even really 50% in it. Okay, then we're going to drop our time frame all the way down to a smaller time frame. So we're going to hour. Now we can see here on an hour time frame that Euro USD, we already know is in a premium overall, just like GU, but we're seeing it taking liquidity down from little levels. So this was Asian session here that was already taken from early, and London session has come down, and let's see what it's been doing. Let's see what I've got a red line in there. Yeah, we've taken this New York session low over here, a previous New York session low, so I could change this to liquidity taken. Now we're also looking, you can see some other liquidity levels below that maybe the market was reaching for, but let's see what's happened right now since it's taken this liquidity here. Let's go to a 5-minute time frame, have a look. But on a 5-minute time frame, we've taken this liquidity kind of in here. We did make a very ugly manipulation W here. I don't rate it. Or on a 5-minute time frame. Let's look down here in this little area and see if there was something that happened on a 1-minute time frame. Let's have a look in here. Was there something that happened that was of interest in the 1-minute time frame? Not really. Yeah, not really. Why did I say not really? Because I can't see no manipulation W obvious in there. Let's see on the 2-minute time frame. Maybe. Here. Boom, 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 boom. Tapping in here. Maybe. Yeah, maybe that was a tap in that we missed. All right. Now, when I say I missed, I just mean that we didn't get in at the best time. It doesn't mean you can't take it later and adjust your stops. Okay. And we're looking at it now. Remember, we think that this market is going to be a big red outside candle. Us buying this is just buying into a potential sell. Yeah. So we need to understand, obviously, at that point in time where possible targets may be, etc. Let's have a look at this. All right. So at the moment, the reason why I'm not going to get in too early here is, yes, we've broken this minor structure in here, but at the moment, we haven't broken this larger structure in here, which you can identify if you zoom out of your time frames and start identifying, where there is higher time frame structure. Yeah, so I don't have to rush behind it. I could kind of say, well, this market's, made a bigger manipulation W on a 5-minute time frame. Yeah, possibly tapping into some of this imbalance that was in here, and maybe we're having a reaction in here. Yeah, maybe. All right, maybe let's look at the 1-minute time frame. Let's have a look what's going on over here. It's not looking beautiful. On a 2-minute time frame, yes, we got another manipulation W here, which I like. There may be an opportunity to take a jab here. It's not great, okay? It's not fantastic. It hasn't broken the structure yet. You can have a wait, in my opinion, for this to happen here. Indication, correction, continuation. Yeah. Or if you're feeling wicked and bad, you can try and get in early on the basis that the market already tapped into a manipulation W, pushed up, it's making another manipulation W, and maybe there's another opportunity to get in on the tap in. So to get in on the tap in, that might happen somewhere here if we see this breaking structure again, because this is, but remember, this push here has only broken these minor structure. Hasn't broken this level yet. Hasn't actually broken that level yet. So you can't get carried away like, yeah, this is going to go up and up and up and up. It hasn't shown us that it can break past this boss here. It's shown us that it can break here. Hence, if I got in a trade down here, cool. By the time it gets up here, you could be risk-free if you really wanted to. Well, it's not quite your 1 to 3, but it depends upon your entry if you got in all the way down here. But the point is, we haven't really broken any significant structure at the moment. And I'm just a little bit concerned the fact that this market already kind of took this liquidity a bit softly over here, had a little reaction, came back here, is a bit soft and pushing a bit deeper. It's a bit, yeah, why are you moving so soft? Why don't you just take that liquidity and run? So it's a very high possibility that maybe the market's not done, and we might see that market come down in here first, take that liquidity, and then make some sort of retracement. But remember, our overall thought process for this day is an outside red candle. So at the same breath as I'm saying that, it's possible. Let me just put the high of the day so I know when it was. The high of yesterday, or the close, sorry, the open of today. The open of today was here. All right, let me make that a yellow line. Open there. And anything above here, I'm just trying to see when the market pushed above there. It did it very early in the morning. Yeah, it did it very early. Remember, the day's starting here. Did it very early in the morning. So anything, the market could come back up in here, because this didn't give anybody any opportunity to do that. It was outside of session time. Or maybe the market could decide to run up into these levels here and then try and make a comeback down. Who knows? Could do. Yeah. But it's about reading and reacting and managing our risk when we get in the trade. Because if we manage our risk when we get in the trade, when it starts to go well, then there's nothing stopping us from adding to our position. See what me drawing my line like this, trying to touch the last kind of high area before the low. We can see that we're currently trading within that box here. Like, we haven't really made any decisions at the moment. Though when we're zoomed in and say, yeah, it looks like we're tapping in that, we haven't really given like no real confirmation that we're actually, changing any direction. Not on the 5-minute time frame anyway. So this is what we have to be conscious of. We want to see the market. We want to be get as many confirmations as possible of the market indicating, breaking some structure, correcting, then continuing. Yes, we've done it on a very small 1-minute time frame. That's fine. And therefore, that could be your trade on a very small time frame. Could have been from down here. Have a look. Tapping in. Stop below the low. Or wherever it was. To here. Could have been the trade. Went to a 1 to 3. Don't get twisted. There's a man out here and that's them, bro. 1 to 3 for the day. They're done. But does that mean that this little kind of flaky little energy here is going to push past that significant high? Not necessarily, especially the way it took this liquidity before all soft. Remember, look, it took the liquidity in London session here and had a reaction. So it's not to say it didn't have a reaction. It took the liquidity, then it ran in the opposite direction, threw the money out of the wallet, and then said, nah, bro, £22.76. No, I'm coming back in here. Next came all the way back down in here, and again, unless I haven't marked it up, hasn't necessarily snatched any big liquidity at the moment. All right, let's see where the market's gone real quick, what it has tapped into. Let's try and work out what it's tapped into. I'm going to put a line here of where that wick's gone to, all the way down in here. I'm going to make it pink. I'm going to make it solid. Let's see where the market's actually tapped into. Did it tap into anything significant? Did it close some imbalance? Did it hit a candlestick zone? Let's see why we've had a little reaction there, because I don't know at the moment. I'm dragging it back unsuccessfully. I'm dragging it back. Let me go to a bigger time frame and this is to zoom in. This is our time frame. I'm dragging it back. All right, let's have a look over here. Is there anything going on here? Anything significant why the market decided that here was a great place to do something? Let's see, where's my little indicator showing me something? I don't know why it's not showing me anything. It does that sometimes. It just decides it doesn't want to show me anything of where the session lows are. Well, this week we can see it did tap into on a 1 hour time frame, a candlestick zone. Yeah, it did tap into a candlestick zone on a 1 hour time frame, which is this bullish candlestick zone here. Here, that's a bullish candlestick zone that the market did tap into. I'd like to drop my time frame down to see something better. So I'm going to mark the date and time, which is the 19th of April at 3. All right, so I'm going to go in here. This is how you anchor to a place. 19th April 300 hours. Yeah. So when I drop my time frame down to 50 minutes and everything goes, oh, where am I? I've lost my place. I can just click this, go to, and it should bring me back to that place. Yeah, which is here, 19th of April at 3. Okay. That's for you guys that when you're doing your markup, how you can make sure you don't lose your position. Okay. If you're back testing or you're looking at data. So the market came all the way down into here, that pink line, you see? That's why I drew the pink line. Let me make it dash so you can see it better. Okay, and we can see that the market actually tapped into a previous battlefield, which is over here. It's not a huge battlefield, but it tapped into a previous battlefield over here, which it had a reaction to. Okay, where the market previously broke some structure on a 15-minute time frame and pushed out of there. I personally think that the market's going to push back past there and grab the liquidity from below. I don't see this as such a great area. Oh, look, it's not even giving me the information on a 5-minute time frame, unfortunately. Let's go to 10 minutes, see if it will give it to me on a 10-minute. It's not giving it to me on a 10-minute either, which is great. Let's just go back to 50 minutes, an hour. We're just going to have to look at it like that, all right? Now, you can pay for more data, so it does give you the information. But remember, as you go back in time, and then you start going down to the minutes and all that kind of thing, that's thousands and thousands of candles of data that this trading view has a cutoff point where it says, you know what, enough's enough, mate. If you want more, you got to pay for it. All right. I just don't know where my other indicator isn't showing, which is annoying. Let's try and see. Let's try and make the other indicator show. Go to my settings. Let me put 800 candles going back and see whether that solves the problem. Nope. For whatever reason, it's not showing me the session highs and session lows. Sometimes it does this. I don't know why. Sometimes, and in fact, I'm going back to April. I don't know. Maybe it needs more candles. You can see it working over there. Let's go over here. Go to. I think over here it's just stopped showing me them for some reason. Who knows? All right, doesn't matter. We can work it ourselves anyway. We can see what time it is. This is Asian session. Look at the time, 2, 3, 4. Yeah, we can see this Asian session in here. This is Asian session energy. So therefore, more than likely below this low, this liquidity level is probably at an Asian session low. You get it? All right, it's probably an Asian session low in here. Either way, let's go to present time and see what's going on with that market, Euro USD. And let's see. Look, what did I say? So don't trust it. Don't trust it. Yeah, we had a little reaction there. Cool, no problem. But it's a bit like you already took the liquidity. You took it so soft over here. And then you're saying this. Look at it. It's all the way back down in here. I'm kind of thinking that it's not impossible to see this market melt and get down to this level. Yeah, it's not impossible that we see it melt down and get down to that level. I know what you're saying. So why don't we just sell it then? Because we have to understand where we're going to put our stop loss and stuff like that. We can't just, chase price. We've got to have our own plan and see if our plan plays out. Yeah, we can't just chase around like a headless chicken. Yeah, so our plan is we're going to see what happens when it gets this liquidity and then potentially buy it up. And if it really goes crazy up into the levels that we thought it was going to buy up, we're going to be conscious of it wanting to turn around and sell and make a big outside red candle by the end of the day. All right, but at the moment, price is near the bottom of ranges, taking liquidities from below. So we're looking for an opportunity to see that liquidity taken and take the trade in the opposite direction. Does that make sense? Does that make sense, my family?
It does. Thank you.
All right.
Thank you.
So we're gonna watch it and we're gonna see what's going on here. We haven't got into nothing this morning. There's nothing I haven't put nothing up on my charts, but we have gone through some different things where you guys can practice. Go on a daily, yeah. Make your own little list, scoot through them, see which ones are outside candles. And then when you look at the out and one says it's an outside candle, that doesn't just mean sell, because you're gonna look at it and go, wait a minute, it's an outside candle, so potentially there's gonna be a big red candle. However, I can see lots of imbalance above. So even if this market wants to go down, it may first go up. Is there an opportunity for you to buy first go up? Well, if you go to a smaller time frame and it's taking liquidity from below, then yeah, there's an opportunity for you to get that up energy. Yeah. But if for argument's sake I zoomed all the way down and it was taking liquidity from above, I still got to trade what I see, because there's no guarantee that that market's going to go and completely close up imbalance. And especially if it's gone and tapped in 50% of an imbalance, it doesn't necessarily need to keep going up and completely close a level. Have a look at this outside candle energy from before. You've seen here, look, outside candle was here, red candle. This is what I've gone through many times, but I'm showing you just as one bit of confluence, not the be all and end all. This was a red candle. Anything above the open of the next candle is good for another big red candle outside. This candle opened here. Anything. But there's no real imbalance here anyway, but therefore you'll figure to yourself it's going to be another big red outside candle. It was a red outside candle just about. This candle opened here. Anything above this candle, we're expecting it to be a big red candle, at least below the wick low. It was. Came all the way down here. We're expecting for the next one to also be a big outside candle. But we're thinking to ourselves, boy, the market might want to come up and close imbalance first. So is there an opportunity? This market opened up here. For all you know, if we zoom down, the market took liquidity from below and gave a little push up. We're thinking to ourselves that at the end of the day, the market's going to be a big red candle, but it wasn't. Yeah, it pushed up into this level, giving us nice pips, but it didn't finally turn around and become a red candle. This candle now isn't an outside candle. It's not telling us anything. Neither is the next candle. It's not outside of the range. But this candle is. So we think to ourselves, okay, maybe the next candle is going to be a big red outside candle. However, we are definitely conscious of the imbalance between where the previous candle wick low was and where we open. So we could have bought into a potential sell. And at some point, even though the market didn't close like that, at some point, this market made a journey of coming up here, all the way down here, before closing back in this level. So that would still been a big trade if he was able to get out. Yeah. The next candle wasn't an outside candle, so we don't have that confluence, but this one was an outside candle. So we're figuring to ourselves the next one's going to be a nice big red candle, but we are conscious. Where are we? Can't remember. We are conscious of the imbalance. We are conscious of the imbalance between where the candle opened, this red candle opened, and where the previous, so that we could have bought up into this level, understanding that 50%, look how it came, exactly 50% of that imbalance between where the new candle opened and the previous low could be an area where it turned around, because we're anticipating another big red candle. We didn't get a big red candle close outside of this wick, but we definitely got to push down all the way to this wick at some point. All right, closed here. This candle was a big outside red candle. Once again, we're expecting for the next candle to be an outside red candle. Okay? But we're taking into consideration this imbalance. Yeah, if I was to rewind it like this. We're taking into consideration this imbalance between where the next candle is going to open down here and where the previous candle wick to. So we could either buy into this energy on the basis we're going to get a nice big red candle sell at some point, or we can just wait for our sell. Have a look at the next candle. Came up in here. We could have bought this wick. And then when we seen, for whatever reason, it took liquidity over a session high, or maybe it was New York session, or who knows, then we're in for the sell for a nice red outside candle. Our first target's going to be, the low of that wick. But if that candle just keeps melting off, then great. Look where it goes. We're expecting another outside candle, but we are identifying and we understand that even though we're expecting another big red candle, we are conscious of this imbalance in here, that the market might close this first. So on a smaller time frame, is there an opportunity, liquidity is taken from below, to buy into this potential sell? Let's have a look for the next candle. Yeah, well, if we was buying into that sell, we would have closed all the way up here. Great trade. If we was waiting for a sell, the market didn't give us what we needed to see to get into a sell. We just didn't happen to get into a trade if we just waited for a sell. But if we bought into that imbalance, the market went because remember, at some point, these outside candle energy is going to change. Here, did we get an outside green candle? No. So we don't know anything, no information. Next candle, we got an outside red candle. We figured to ourselves, okay, maybe the next candle is going to be another outside red candle, but we are again conscious and concerned about this imbalance between the last wick and where the next candle is going to open over here. Let's see what that candle looks like. Bought up into that level, as I said, actually ran straight past the imbalance and pushed up quite aggressively, but then closed, as we thought, like a lovely outside red candle. This is not one I made earlier, guys. I'm just clicking back through the candles. And I'm saying that even in what I'm saying is only 15% confluence. We still got to drop our time frames down and look for liquidity. But at least now you've got some little bit of equipment that you can bolt onto your trading to say, I know outside candles. I understand that when I see an outside candle, if there is substantial imbalance, that the market may want to first close that before making another outside red candle. I also understand the market doesn't have to completely close it, but 50%, if at 50% level on a smaller time frame, we can see there's loads of session highs there, Asian sessions there, previous New York there, previous, and we see the market take that liquidity. Well, maybe that's it, done, happy. Taking the liquidity from above those smaller sessions, and then it's going to turn around. It didn't close the whole distance, but at 50%, it closed 50% and took big liquidity from above. Do you understand what I'm saying? Let's see what happens with the next candle. If this is an outside candle here, we're looking at this potential concern about this imbalance in here. Let's see what happens. The next candle does exactly what we think it's going to do. It comes and closes that imbalance and then does what? Gives us another lovely red outside candle. My only concern now is looking at that candle is I'm seeing quite a lot of wick to the bottom, meaning there's quite a lot of buyers that push that market all the way back up in here. So maybe the next candle is not going to be a big outside candle, but who cares? We're going to trade what we see. All right. That ultimately the market may buy into this level and then make another big red candle. I'm thinking it might just be a green candle now after seeing all this wick rejection, but let's see. Jeez. So that buy into that level was fantastic. It pushed straight past it and made an outside green candle. Now remember, this has to also coincide with our bigger picture narrative of where we are in the market. Because if we're at the bottom of a range, we're not expecting it to we're expecting the reaction of a bottom of a range. But the bottom line is you can see me showing you this added bit of a source that you can add onto your trading. Yeah. And even if the market is going to be a sell, a big red candle by the end of the day or a big green candle, the market may first close up in efficiency. It doesn't do it all the time. I can see here, right here, a time it didn't do it, and it left the big imbalance. Here, look, big red outside candle. It didn't come all the way back into here to close anything. But, like I said, anything above the open of that next candle would be a good entry. And for all we know on a smaller time frame here, if this market just grabbed liquidity from above a session high, made a lovely manipulation M and tapped in, and on that basis, you got to trade what you see. You got to hit the button. If this is, in line with where you want to take the trade from, etc., etc., etc. I hope I've given some serious source this morning. I hope for somebody, something else has just clicked in their brain to help them with their trading. If it hasn't, it will come. Yeah, it's not a sprint. It's not a race. It's just for you to get more and more understanding. And now I've showing you these guys in regards to additional confluence. Go back, get your favorite pair, go back and start having a look and seeing what you would have thought for the day. Is it going to be a bullish or bearish day? Where, if you drop the time frame down, you would have gotten in, and would you have made some money? And if you can see time and time and time again that this is working, or I would have gotten in here, there you go. Slap it on your strategy and get the confidence from it and be like, yeah, bro, this is actually helping me. Yeah, and that's it. That is it, guys. I'm grateful for you guys being here. All right. giving me an opportunity to sharpen my tool. Yeah, pause. Yeah, and get better at my craft of being able to understand these markets and also being able to share it with you so that you can also be on your journey also and do great things. I'm going to go into YouTube this morning. I'm going to put something on that's going to help us expand the grey matter, teach us something about something. I'll tell you what, we'll watch something trading related. I don't know what it's going to be about. All right. But it's the guy's talking, he's probably talking a lot, but he's saying that I've actually seen this guy and I think he is one of the Forex scam artists. All right. However, we watch it anyway. Okay. We will watch it anyway of how he took $5 and turned it into $1,000, he's saying, in only 4 days trading Forex. But I have seen this guy hasn't got the best of reputations, but we play it anyway. All right. For the people that are watching at home, like,